Hi traders, you are all welcome to another weekly Forex forecast on FXless Trading School,
which is for 1st to 5th of March year 2021.
In this week, I'm going to share with you some list of currency pairs I have on my watch list next coming week should in case of trade breakout opportunity. And then if today is your first time viewing my YouTube channel, do not forget to click on the subscribe button as well. Hit on the notification bell so whenever I release additional content of this kind, you're going to be the first to be notified.
Also, remember, trading is a high risk and a high reward investment. Therefore, it's advisable you know what you are doing and then risk smartly.
Here are the list of currency pairs I am watching out for next coming week.
I have the British pound sterling paired against the USD. I have the euro paired against the USD. I have the USD paired against the Japanese yen. I have the Australian dollar paired against the USD. And then we're going to wrap up things with the US oil. So let's dive into the weekly Forex forecast right now. The first currency pairs on our watch list is the British pound sterling paired against the USD. I've been emphasizing about the risk which lies on these currency pairs if you are trying to buy the high of this no trend right there. I said this pattern we got right there have high tendency to transform this bullish trend right there into a bullish trap. So we can see right now it is actually playing out as I forecasted weeks ago. So next week as a price action trader, I want to figure out how price is going to react to this dynamic trend line right there. Maybe it's going to turn into a dynamic support level for price, or maybe the key level structure of the 1.37938 is going to serve as a new support for price. So next week, if the boost can carve a strong bullish price action bar right here, or maybe right here, this zone right here does has a lot of probability to interest more buyers to pull the currency pairs into a more bullish rally. Alternatively, next week, if the bear should clear off this dynamic trend line right here and the key level structure which acts at the price level of the 1.37938, then it does suggest the bears are willing to put price more downward in order to retest the last swing high low we got right here. And then if the boost should fail to defend this level structure of the 1.36000, then it does suggest the bears are willing to expose the next key level support which acts at the price level of the 1.34536. But take note, before the bears can be able to put price to this level right there, it means there must be high volatility in the market. And then if that should occur, do not forget the dynamic support trend line we got right here can actually serve as a new dynamic support for price in order to lead into rejection of price upward again. So next week, I'm going to patiently focus my attention to this dynamic trend line. Likewise, the major key level structure of the 1.37938 to see if price is going to offer us a strong bullish price action bar in order to continue this aggressive bullish rally we got on these currency pairs. The next currency pairs on our watch list is the euro paired against the USD. I shared my personal opinion on these currency pairs in my last weekly Forex forecast, and I said for as long price still trade below the right shoulder of this head and shoulder we got right here. Can see that for as long price still trade below this level right there, it suggests the bears are still in battle with the bush right here. So we can see price is currently going in a range market which I forecasted last week. And as well, if you pay close attention to the pattern I got right here, you can as well tag this as a bull. So you can see the formation right here. As well, we got an inverse head and shoulder which I shared with you guys last week. So we can see what we had right here now is gradually turning into a broadening shoulder. We got a sharp edge right here, a sharp left shoulder right here, and then we got a broadening right shoulder. So the pattern we got right here as an inverse head and shoulder is still active, and then not until the bears can clear off this right shoulder right there. So next week, I'm still patiently monitoring these currency pairs to see how price is gonna build up. And then there's something I want to share with you guys again. If I should eliminate this bull right here, you guys gonna figure out the pattern we got right here in combination with this dynamic support trend line is an ascending triangular formation. You can see that, an ascending triangle, which does suggest a bullish implication. So next week, there's high tendency for price to build up within this pattern right here in order to fill up this ascending triangle for a more bullish upward rally. So what I can figure out right here technically is the bulls are trying to build up momentum in order to break out of this pattern right here for a more bullish continuation rally. Alternatively, next week, if the bulls fail to ensure a strong daily close of bar above this minor key level structure, which I represented with a blue horizontal line, which is the price level of the 1.21759, then it suggests the bears are still going to struggle with the bulls right here. And then if the bulls should fail to defend this dynamic support trend line right there, it does suggest the bears are willing to break out of this pattern. Even though if the bears should break out of this dynamic support trend line right there, there is still high possibility this currency pair is still going to move within the range, and then not until the bears can successfully clear off this major key level support, which acts at the price level of the 1.19653, before we can actually know the next movement of this currency pairs. So next week, as a price action trader, I'm going to focus my attention to the minor key level structure of the 1.21759, which is the neckline of this broadened head and shoulder we got right here. Likewise, the dynamic support trend line we got right there. Maybe price is going to clear off this last high low swing, which is the right shoulder of this inverse head and shoulder right here. So next week, pay close attention to these currency pairs. The next currency pairs on our watch list is the USD paired against the Japanese yen. We can see our price broke out of this bearish narrow wedge, and then we can see the build up of bullish wave right here. I shared a buy setup on this currency pairs with the VIP members community of mine last week, and then the trade right there is still a profitable trade. So where is the next potential of the movement of the USD Japanese yen in the month of March? Next week is going to be a new month, so which means we got to check this currency pairs on the monthly chart frame. But before we check this currency pairs on the monthly chart frame, we got to know the next major resistance structure comes in at the price level of the 106.947, which was a low high for price right here. So I know you don't want to buy into resistance structure next week, so let's check on the monthly chart frame of this currency pairs as well. So here comes the monthly chart frame of the USD paired against the Japanese yen, and we can see right on this chart we got a formation of a symmetrical triangle. Technically, a symmetrical triangle is an indecision pattern formation, which suggests the breakout can be to the upside or maybe to the downside. But for the kind of formation we got right here, we can see this pattern formed after a bullish aggressive rally, and then this suggests there is a high possibility for the bulls to break out for a more bullish rally on this pattern. Before this pattern can actually lead into a multi-year bullish aggressive rally, then it means the bulls must ensure a strong monthly close of bar above this dynamic resistance structure of this pattern. We can see whenever price retakes this dynamic resistance structure, it always leads into rejection of price. And then studying the bars formation right here, we can see the month of February was a strong bullish aggressive month. Also, we can see January bar was an engulfing bar to the month of December. That was the last year 2020 right there. So for the kind of formation we got right there, there's a lot of bullish sentiment building up, and then this can actually interest more buyers to break out of this pattern. But before the bulls can actually lead to a more multi-year bullish aggressive rally, they need to ensure a strong bullish close of bar above this dynamic resistance trend line. Likewise, the major key level structure of the 106.947. So let's make our conclusion of analysis based on the daily chart frame. Here comes the daily chart frame once again. So if you missed the buy setup which formed on the 4-hour chart frame of this currency pairs last week, then I think you don't need to buy into resistance, but patiently wait if price can retest this structure right here. Focus your attention to see what price have to offer. Maybe if price gonna offer a bearish price action signal, or maybe a breakout. And then if a breakout should occur right here above this key level structure of the 106.947, whereby the bulls ensure daily close, then it suggests the bulls are willing to expose the next major key level resistance, which acts at the price level of the 108.115. Alternatively, next week, if this level should reject the bulls, whereby the bears helping, there's high possibility for the bears to retest back the key level support of the 106.115. And if the bulls should fail to defend this level right there, then it suggests the bears are willing to pull this currency back below this high low structure we got right here. So next week, focus your attention to the major key level support of the 106.115. Likewise, resistance which comes in at 106.947. Also, don't forget what the monthly chart frame is saying. The next currency pairs on our watch list is the Australian dollar paired against the USD. I share with you guys in my last weekly Forex forecast my personal opinion on this currency pairs, and I stated if the bears can put price back to this dynamic structure trend line of this bullish flash we got right there, then it suggests this pattern it's a weak pattern. And then if price can ensure a strong bearish close below this dynamic trend line right here, then it suggests this pattern right here has been invalidated, and this is actually trying to play out, but the dynamic trend line we got right there is still resisting the bears. So next week the fate of the Australian dollar pair against the USD lies at this dynamic trend line right here. Likewise, the major key level support of the 0.76373. If the bears can successfully put price below this dynamic trend line and the major key level structure right here next week, then it means this pattern right here it's no more effective. Alternatively, next week, if the bush will step in whereby they put price upward, they still have to clear off the last swing high we got right there, which is the key level structure of the 0.78181, before they can anticipate for a more bullish aggressive rally on this currency pairs. And then that should occur, it simply signifies the pattern we got right there is just simply trying to build up a bullish wave pattern set up for a more bullish rally. So next week, focus your attention to the minor key level structure of the 0.78181. Likewise, the dynamic trend line we got right there. Likewise, the major key level support of the 0.76373. Also, expect high volatility on this currency pairs next week due to the Australian interest rate news coming next week. It's time we wrap up our analysis with the US oil. We can see the US oil is on a booming market. We can see the strong bullish aggressive rally. And we can see resistance comes in at the price level of the 64.112. So let's check this resistance level based on the weekly chart frame. So here comes the weekly chart frame of the US oil. We can see price is currently at a resistance structure, which is a multi-year resistance structure zone. That is the price level of the 64.12. You can see the resistance structure right here as a bearish engulfing. That was in year 2020. We got the resistance structure right here. That was the year 2019. We got it at a support right here. That was in year 2018. Likewise, right here as a support year 2018. So this is a multi-year key level structure we got to pay close attention to next week and the next month on the US oil. So I'm making up this analysis based on the requests I have received from traders, and then especially the members of my community and the subscribers who have been asking they want analysis on the US oil market. So my personal opinion on the US oil is I'm not gonna buy the US oil right now. I'm gonna patiently wait if price can make a pullback right here before I'm gonna be willing to buy right here. I actually sent out a buy setup idea on the US oil. That was a weeks ago. That was the last month, January of this year. So if you follow the trade setup, I think it's the right time now to take your profit and then walk out on the US oil. So I believe this is gonna help you to make a nice trading decision in the US oil markets next week. So thank you guys, thank you so much for watching this video from the beginning to the end. I really appreciate your time, and do not forget to like this video, put a comment down, share this video with your loved one, subscribe to this YouTube channel, as well hit on the notification bell so whenever I release highly educational content of this kind, you're gonna be the first to be notified. Wishing you a lovely weekend ahead. Peace.